Hello, and welcome to Lesson 17 of the Masuda Ashi Introductory course. Today will be the first lesson of 2 lessons where we will talk about the 6-color spectrum. Now first of all, let's do a quick review of the 6-color patterns that we finished studying in the previous lesson. As you may recall, we had 6 different color patterns. The F pattern here, A pattern, and the B pattern, respectively white, yellow, and green, being the 3 uptrending patterns, and the patterns C, D, and E, respectively red, dark blue, and black, being the downtrending patterns, 3 downtrending patterns. Now, an easy way to remember this is that with the uptrending patterns, the short-term Masuda Ashi real body line is always above the medium-term line. As you can see here in the F pattern, short-term line is above the medium-term line. In the A pattern too, and in the green B pattern, the short-term line is also above the medium-term line. Conversely, for downtrending patterns, the short-term real Masuda Ashi real body line is always below the medium-term line. As you can see here, the short-term is below the medium-term, short below medium, and also short below medium here. If you recall, the relationship between the short-term and the medium-term line was one of the points that we discussed at length back when we looked at the textbook example using only those 2 Masuda Ashi real body lines. And with the 6-color pattern classification, we also incorporate the long-term Masuda Ashi line in order to form these 6 individual patterns based on the relative positioning of where the short, medium, and long-term lines are in relationship to each other for a stock at a particular point in time. Let's now look at a real example of the 6-color patterns upon which the 6-color spectrum is based. The chart we have here is for the Nikkei 225, which is probably the most well-known Japanese stock market index, the Nikkei 225, and as the name implies, it comprises of 225 representative stocks in Japan. And the way we bring up the 6-color spectrum is by this button here, and you can see that it comes up on the bottom half of the chart. Now if you look carefully, you'll notice that we have 6 colors in here. These are the 6 colors that we've just been studying. Now, over on the left-hand side, we have N225. This stands for Nikkei 225. There are actually 2 types of 6-color spectrum at this point in time. The Nikkei 225 topics, and also under development is a similar 6-color spectrum for the S&P 500 for US stocks. That will come in due course. Now, at the very bottom, we're displaying the F pattern, which is the white color. Now, if you remember, white is F, yellow is A, green is B, and C is red, D is blue, and E is black. On the chart, it's shown as grey, just because black on black would not be visible. So we can see the 6-color patterns already coming into play here. So the next question is, what exactly does this chart represent? Now, if you look at the Nikkei 225, as we just mentioned, there are 225 stocks within the index. And what the software does for each of those constituent 225 stocks is work out the patterns based on the relative positioning of each stock's 3 Masuda Ashi real body lines. Now, we'll pull up the constituent stocks within the Nikkei 225. Beginning with 1332, this is Nippon Suisam. And you can see down here, this is all in Japanese. However, we have a long scrolling list of the 225 stocks within the Nikkei 225. So beginning with this stock, if you look here, this is as of July 12. The 3 Masuda Ashi real lines are here, the short-term line, the medium-term line, and the long-term line, and the short-term line is above the medium-term line, which is also above the long-term line. So this would mean that this pattern is the B pattern, which is green. Now, even if you didn't remember the patterns that we've been studying in the 6-color pattern classification, you can look down here at the bottom of the screen where you can see the letter B here. Now this relates to the positioning of the white basis line at any point in time. So at this point, it's B all the way down to here until you get a crossover of the short-term line and the medium-term line. Let's have a look at the next stock. This is Maruha Nichiro Holdings 1334. Now what do we have here? We have the long-term line. No, beg your pardon. We have the medium-term line is above the short-term line, and the short-term line is above the long-term line. So we know already, because the short-term line is below the medium-term line, that this is one of the downtrending patterns, C, D, or E. And again, we can look down here to confirm, yes, we have the C pattern in play right now. The third stock within the Nikkei 225 is 1605. And we can see here clearly that the short term is below, the medium term is below the long term line, which means that we are in a black or an E pattern, and this again is confirmed by the software. This is the worst pattern. If you wanted to add the shadows, you could see as well that we're in a deep blue zone here. The aqua blue meaning a downtrend. And one more stock we'll have a look at right now. This is Comsys Holdings 1721. Now, in situations like this where it's hard to determine whether the short term is above the medium term, you can always just confirm here directly. We're still in an E pattern here. The other way to confirm this is using the 6-color band, which we invoke using the zone button here. And you can see the line on the bottom is the daily MASUDA ASI 6-color band line, and the line on the top is the weekly. So still we've been in a black zone all of this time, which is the E pattern as well. So what does all this mean? Well, for the 225 stocks, the software determines which pattern each of those stocks is. And when we have this all aggregated, we get, for example, how many Fs, how many As, how many Bs, how many Cs, how many Ds, how many Es for each of those 6 colors. They are tallied up, and this chart represents over time, for each particular day, how many stocks were F pattern whites, how many were A pattern yellows, how many were B pattern greens, and so on. This is just a simple tallying of those for each day. Now you can also see something similar here. We have white, yellow, green. These are the percentages of, so white being the F pattern, the number of F pattern stocks on this particular day within the Nikkei 225 was 23.3%. The number of yellow A pattern stocks was 4.5% of the total, and green 5.8%. Now, remember that FAB, the white, yellow, and green, these comprise the 3 uptrending patterns. And as we know in Masuda Ashi, that an uptrend is represented by the pink color. So we have here the total, 33.6%. This is the total percentage of all these 3 uptrending pattern stocks. Similarly for C, D, and E, the red, blue, and black patterns, we have 1.8% being the C, 4% being D, and 60.5% being E pattern stocks on this particular day, marked by the white basis line, part of the predictor group of lines. So, and you can see clearly by the 6-color spectrum that the grey percentage, or black, E pattern stocks are overwhelming in the market as of this day. 60.5% is nearly 2/3. And so you can see here that most of the stocks within the Nikkei 225 on this day were in the worst pattern in terms of Masuda Ashi real body lines. That means that their short-term Masuda Ashi real body line was below the medium term, which was below the long-term line. So that's a lot of stocks. And you can see the second largest group was the white pattern. This is the F pattern, being the end of a decline. So this is, although this is an uptrending pattern, it really only represents a shift out of E into F. So it's still quite weak. And as you can see, the number of good trending pattern stocks on this day, the B pattern stocks is only 5.8% of the whole 225 index, which is not that great. Now, if we take this one step further, you can see over here we have what looks like the 6-color spectrum, but it's been rotated 90 degrees to the right hand side, and it's actually showing 6-color spectrum topics at this point. If we go back to, we'll go back and show the Nikkei. When we have the Nikkei market 225 showing here, this will bring up the last 8 trading days of this actual 6-color spectrum. Flip them to the right, and the reason that we have the 8 here on the right hand side, that last 8 trading days, is it provides a little bit of magnification, so it makes it easier to see, and we can see changes more easily as well. And this also will move in sync with the white basis line, which we can move. As you can see, as we move the white basis line left, this 6-color spectrum also changes based on where the white line is at that point in time. We'll return it back to where it was for now. Now, you can also see in this lying down 6-color spectrum for the last 8 days that we have some numbers in here. These are the actual numbers of stocks within the Nikkei 225 that were, for example, E patterns stocks on this day, 135. Now 135 divided by 225 stocks for the entire index gives us our 60.5% number here. You can also see in smaller numbers the pink color 33.6, 23.3, 4.5, 5.8, the green color. These are the corresponding numbers from here. So one of the other features of the MASUDA ASI chart system is that all the information is provided for you on one screen so that you can take in everything and judge where a particular stock is, where the trend is, where the turning points are at a glance. And you can, this is like providing an X-ray insight into the sentiment of the market at a particular point in time. One last point before we conclude this lesson. If you look over here again, we have the different 6-color spectrums, this one for the Nikkei 225 and the one below for topics. Now I'll click topics, and you can just see that the chart shape changes slightly. Now this is partly because of the number of stocks in each index. The Nikkei 225 only has 225, whereas the topics is all the stocks listed on the first section of the Tokyo Stock Exchange, and that's about 1,700 stocks. So it depends on which index you want to look at the time, and in order to get the topics appearing up here, we can go back and pick up topics from the index display. That will give us the topics screen. And similarly to what we did before, when we go back in time, we can see that as the white basis line moves, the reference to the last 8 trading days worth of data for the 6-color spectrum, which has been rotated 90 degrees to the right, also changes. And again, we have the number of stocks here and the percentages below, which correspond to the percentages over here. That's all for this lesson. And in the second lesson about the 6-color spectrum, we'll be looking more closely at how we can use this 6-color spectrum as a leading indicator to try and gauge where the market is headed and also to judge investor sentiment. That's all for now. I look forward to seeing you in lesson number 18. Thank you. Goodbye.